Welcome back to the Crypto channel, everyone. My name is Josh, and right now, while Bitcoin is still playing out this bullish divergence, we are seeing a massive recession signal officially confirmed on this chart right here, which has predicted every single recession in the United States for the last 3 to 4 decades. So I'll be talking about that in just a moment, alongside Ethereum still holding above this important Fibonacci level of support, while the price of Chainlink is coming in for another test of this critical area of resistance. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, we need to take a look at this chart right here, which is the 10-2 yield spread. So basically, in case you're new to all of this, this is the 10-year treasury yield minus the 2-year treasury yield. And so we're talking about US treasuries here. Basically, if you buy a government bond, for example, from the US government, you're effectively lending the US government your money, and in return, the US government pays you a coupon, basically a yield on that investment. And when everything is going to plan, when everything is normal how it actually should be, usually the longer you invest your money for, the longer you loan out your money for, the higher the interest rate you receive. And so that creates what's called a yield curve, where it's usually a line kind of like this. So on the short end, you're basically getting lower interest rates. If you buy, for example, a 1-year government bond, it might be a lower interest rate compared to if you're, for example, buying a 10-year government bond, you should be receiving a higher interest rate to actually be compensated for locking your money up for a longer period of time. And so that's known as a positive yield curve, when everything is normal, going how it should be. And all of this right here on this chart is when the yield curve is positive above 0, because this white line is at 0. And so once again, this is the 10-2 yield spread. So the 10-year yield minus the 2-year yield. So if it's positive, once again, that means you're getting more for locking up for a 10-year period compared to if you're locking up for a 2-year period. But some brief periods within history, this yield curve actually flips negative. And these periods in the market right here, these very brief periods within history, are basically when you can actually get a higher interest rate for short period lending, short-term lending, and the longer term interest rates are actually lower than the short-term interest rates. And that can actually cause some big problems for the banking system, because the entire banking system, pretty much in terms of retail banks, they effectively make money on a positive yield curve, because they basically take short-term deposits and then lend that money out over long periods of time in the form of home loans and things like that to actually make money on the difference between the interest rates. And so during these periods in the market, when the yield curve is negative or the spread is negative, basically that causes some big problems for the banking system. And usually the market only prices this yield curve or this yield spread in the negative when things are basically starting to get pretty bad. And so that's an explanation of what this chart actually is. But if we're looking at what the outcomes were of all of these signals right here on this 10-2 yield spread chart, this is on the monthly time frame, by the way. So each one of these candles is one entire month. And so this chart right here dates all the way back towards around 1988. So we're looking at around 30 to 40 years worth of price history on this chart right here. And if we're taking a look at the first time this signal flashed, at least on this chart right here, based on the current price history, we do have a negative signal right here in the yield curve or the yield spread. And then basically just after it flipped positive, we saw a recession in the United States. These red areas on the price chart, by the way, are the recessions that have been confirmed in the United States.